Now, Nigeria's Monetary Policy Committee says it expects higher inflationary pressures in the short term, driven by risks such as rising fuel prices, flooding, and exchange rate volatility. AbdulAzeez Kuranga, regional economist, West Africa Standard Bank Group, joins me to unpack the policy decisions taken yesterday by the MPC. Thank you, AbdulAzeez. Pleasure to have you on the show today.
Thank you for having me.
Now, we had a panel here yesterday talk about, of course, the outcome of that meeting. And one thing we all agreed on was that expectations, the outcome did not align with expectations. Everyone was expecting a hold. But let's start with your expectations and what you made of that announcement.
We were also expecting a hold at that meeting yesterday. And our expectations were hinged on two key factors. And the first is that headline inflation are moderating for 2 consecutive months, and despite the expectations that inflation should be increasing in the near term, we're expecting that inflation will not be touching the 34.19% year-on-year peak that we saw in June. So that should be supportive of a whole decision. And aside that, there was also a body language from the CBN from 26th of August when we had the SDF, SLF, in such a way that now banks can only place a maximum amount of 3 billion naira on an overnight basis with the CBN to earn the prevailing rate as of then of 25.75%. And any amount greater than that will be remunerated at 19%. So that meant that the opportunity cost for bringing in for depositing money with the CBN will just be to buy bills. So as a result of that, we saw rallying in bills. So that's sort of like, to the minds of our market players, sort of like brings into consideration of a dovish stance in a tight monetary environment. So if that is the case, you then look at it that, okay, if this is what they are trying to do, and because the economy or the structural factors was not really aligned with a rate cut at that meeting, then probably the optimal option at the meeting would be to just hold the key policy rate. So those two key factors informed our expectations of a hold.
But did you think a 50 basis point hike was a little aggressive? And thinking about the rationale behind that, the CBN said, look, we're still very concerned about inflation, especially core inflation.
It's not aggressive. They are already looking at a positive real returns, right? So you see 50 basis points. So we just see that as like a restatement or an emphasis from the CBN that, look, markets, we are still resolute on our stance on fighting inflationary pressure. So don't even think of it and that we are going to a dovish stance. So aside that, there are also views that this is also likely a sort of trying to stay ahead of the curve in terms of you expecting that inflation will be increasing in the near term. So to just stay ahead of that, then you hike by 50 basis points. So it's not aggressive in our view.
Right, and still on the issue of inflation, we're somewhere at around just over 32%. Now, we obviously had that sudden increase in the price of petrol, and I suppose the CBN is waiting for that to kick in the next inflation data. But talk to us about, because some analysts have said the CBN needs to re-anchor its inflation and exchange rate expectations going forward. With what we're seeing with the pump price increase. But talk to us about your inflation expectations. What kind of jump should we expect at the next print? When can we expect it to begin to taper down again like we saw in the last 2 months?
Okay. For us, you first of all look at transport. The transport CPI is about 12.7% of core inflation and about 6.5% of the overall headline inflation. Where we were coming from last year, we saw about 2.76x increase in fuel prices and also FX unification. Both of them led to significant increases then. But right now we are seeing between 35–50% increase in PMS prices. So that jump that we were expecting may not be much. So however, there are also other key constraints or key factors that should also be driving higher prices. First will be the flooding issues that we are seeing. So that is likely to just cap the expectations around harvest season so far this year. And that also combining with the direct and indirect impact of fuel prices on transport costs and food prices. Right. So We're expecting that by September we should be seeing the headline inflation settling at about 32.4, 32.5% from the current 32.15%. So we are still expecting another increase by October, but by November we're expecting a slight moderation, likely driven by the large base effects from the prior year. So from our expectations and our in-house forecast, we're expecting that headline inflation should be ending the year at about 32% by year end. We are not seeing headline inflation breaching 30% until February
Q1
2025. And also recall that the CBN has an inflation target of 21.4%. So this PMS price increase, in our view, will be setting the CBN aback by about 8 months. So
there's also the wage increase that we're expecting, and potential, even increase in electricity tariffs. That's also on the table.
So those also are also likely factors that will now take us about until, based on our current estimates, until February 2026, and before we see inflation touching that target. So because headline inflation is likely to be below the current MPR rates by May 2025, and we are still factoring in that the default interest rate cost may likely come by then. Other than that, once the November policy meeting kicks in, and we're expecting for further increase based on the tone or based on the language, policy language that we've seen.
Is it a slight increase, just as aggressive 25 basis points, 50?
Between 50 to 100 basis points increase, then after which you are likely to just see them.
Okay, the MPC seems to have developed a habit of not going in the opposite direction of market expectations and forecasts.
This is like the first time the MPC is going against our market expectations, or in terms of rate hikes. From February, you expect 300, 400, you do 400, you expect 200, you do the 200, you expect 150, you do the 150. So this is just really like the first time that the actions are against market expectations.
800, we're at 850. And for the banks, deposit money banks, cash reserve ratio going up by 500 basis points to 50% from 45%. Talk to us about market impact. I mean, you still expressed confidence in the banking industry, still, like, according to the CBN governor, still strong, still resilient. But of course, we know we need to get to that $1 trillion economy as soon as possible. But talk to us about what you thought was going on in his mind.
If you look at the latest statistical bulletin of the CBN as of March 2024, total deposits in the banking system in local currency, the local currency deposits are about 46 trillion naira, spread between 25 trillion naira in other deposits and 21 trillion naira in transferable deposits. So if you just go that between then and now and assume probably it has increased by 5–10% to about 56 trillion naira. So you take that 5% on that deposit, so you should be getting around 2.8 trillion naira additional mopping up from the system. So we don't really expect them to just take this at once. So it will likely be a gradual approach from the rest of the year. So if that is the case, you are just likely going to see less OMO issuances.
Do you think that for the monetary authorities, they have done what, maybe it's a strong word, the very best they can on the monetary side? And I know he did allude to that, in some of his comments, when he mentioned things like that he noticed that there's a spike, in liquidity and pressure on the exchange rate when, funds are released from the Federal Accounts and Allocation Committee. And of course, there's still pressure on food insecurity, etc. But obviously, those are not things that the monetary authorities have control over. They can only, of course, exchange rate and price stability. That's their core mandate. But that call, again, to the fiscal authorities, to help fix structural issues, to do their part, as it were. Talk to us about that, how the fiscal authorities are interpreting the outcome of this meeting.
So it has always been an issue with Nigeria. So at least so far, since Cardoso came into the system, he has tried as much as possible to introduce orthodoxy in the system. So in our view, we think they are really in line going the way they should be in terms of the monetary policies. So we are happy, and though more still needs to be done, and that complementary actions with the fiscal authorities is also still needed, because monetary policy alone cannot do this. So you need, which you also mentioned yesterday, so you need that supportive actions from the fiscal
Right.
authorities.
And speaking about support, he also did talk about the exchange rate now, that for those who are still thinking that, the Naira, I mean, obviously it's that's the gate, that's the aim, to strengthen the Naira, to support the Naira as much as possible. But he did also, provide a caveat that, look, we're still a monolithic economy. Exports, non-oil exports are not where they ought to be. So we shouldn't expect magic, if you will, lack of a better word, in terms of the Naira strengthening. But we have seen the Naira at a somewhat predictable band of 1550 to 1650. Is that what we can expect, in the short to medium term?
Still ranging around that area, because so far you are seeing the CBN coming into the market. For September alone, we've seen them about 4 to 5 times coming into the market. So just so as to support the currency. So we've seen them, so we're expecting that to be maintained, especially as we are seeing improvements in inflows, driven by all these one-off factors of.
I thought that, with that improvement in the inflows, he would, but I guess the fundamentals are the fundamentals at the end of the day. If the fundamentals are not there, then it's still an issue, even if inflows are increasing by on a monthly basis. But are you bullish on the currency? On the economy as a whole, in terms of light at the end of the tunnel? What's policies and impact of the reforms?
So to take that, probably I would just need to take us back to some of these rating actions that we are seeing. So far, the 3 key rating agencies, they've maintained the ratings at current levels, but outlook has been positive. And that is hinged on all these reforms being maintained. So we think if this continues, so pressures are only likely in the near term, then over the medium term. So you tend to see an improvement. So for instance, is these inflationary pressures. You can see so far as you are moving further into the following year, so far the pressures continue to subside. You calculate headline inflation on a year-on-year basis. Right. So you always see this inflation the same period the following year. So
all right, AbdulAzeez, we're going to have to leave it there, but thank you so much for sharing your perspective with us today. We appreciate your time on the show. AbdulAzeez Kuranga, Regional Economist, West African Standard Bank Group, unpacking the decision of Nigeria's Monetary Policy Committee yesterday.